All right. Today's SPY was up 0.23%. And over the weekend, I went into a detailed analysis of everything you should be focused on from here as far as the price action goes in the market structure. And today we did close inside the supply zone yet again, which is where we are likely going to start finding sellers. Now, if you view this supply zone as the danger zone of where you should be selling and locking in profits and starting to initiate low risk shorts, you can easily see how this was the highway to the danger zone. This is straight up leaving 3 gaps below, and that is not healthy, and eventually we will need to get a higher low, because if we're coming out of this downtrend, the only thing that can define an uptrend is higher highs and higher lows, and this is still very clearly lower highs and lower lows. So be very cautious if you're getting FOMO and you're getting fear of missing out and people are trying to tell you the market's just going to go straight up to all-time highs with no pullbacks. That is the trap you're going to fall into if you start buying at resistance and ignoring the fact that we have a lot of backing and filling to do before we can go any higher. Now, that doesn't mean we can't go higher in the short term, and yes, we could push into the 440s before we get that pullback, but what you need to understand is risk is increasing of a pullback in this supply zone as we approach the downtrending resistance trendline, and later in the video, you're going to see the triple Qs are already at that resistance, and the small caps are already starting to pull back from that resistance. So be very cautious here and pay attention to all of the gaps below that take us down towards 430 and 423, and then even as low as 418. On the Nasdaq 100 triple Qs, we were up 0.41% today, and the triple Qs closed right near that downtrending resistance trendline and critical supply zone right there at 370, which doesn't guarantee we can't break out and break through that resistance, but it's going to be very difficult for the bulls to do that because we went up in a straight line. This is unhealthy, and this used a lot of energy to get to resistance, and it's not easily going to break resistance without a pullback first. If the bulls get a higher low pullback towards support and close some of the gaps and then make another crack to break out, that's going to be a much simpler time to break through resistance rather than just going straight there in a straight line without any higher low first. So I'm still looking for a higher low before I get bullish, because this is still a downtrend of lower highs and lower lows at critical resistance at 370. The downside gaps are at 363, 357, and 351. In the Dow Jones, we were up 0.13% today, and the Dow Jones closed at critical resistance yet again, which is 341, which is the previous resistance we rejected, which was the old support. So again, this is very critical resistance, and if we push a bit higher, we have the downtrending resistance trend line just above 343, and the gap to fill just above 344. The downside gaps are at 338, 333, and then all the way down there at 322. On the Russell 2000 IWM ETF, we were down 1.25% today, and this is extremely bearish because we're not getting the expansion in the market breadth that we need to see with the small caps, because we're pulling back from a negatively sloping 50 EMA and we're still in a very powerful downtrend. A rejection from 174 or 176 could easily bring us back down to 170 or the gap fill at 165, and if we break this support down here between 162 and 164, we can still make that next leg lower at 157. In order to get more bullish, we need a higher low into a higher high, and we need to start breaking this resistance at 180. On the ARKK ETF, we were down 1.66% today, and we rejected from the critical resistance at 40.5, which I told you was the major breakdown within the bear market that meant we were likely going to 36. As you know, we exceeded 36 and we went all the way down to 34, and if we get rejected from this resistance yet again, we could go fill the gaps at 38, 35, and just below 32. On the VIX, we are flat on the day, only going down 0.07%, and the VIX is telling us we're more than likely going to continue the bull trend as long as it's below 18 and 20, but at any point we could see the VIX spiking, and we're going to know we're likely going to a bearish scenario if the VIX gets out there above 20. On Bitcoin, we're currently up about 0.25%, and we're still trading at the resistance at 35,000, and we're still in a bull trend, and we're still remaining bullish above 32,000, but don't rule out the possibility of a higher low pullback before we continue any higher towards that next target up there at 37,000. On Tesla stock, we were down 0.31% today, and today we did reject a negatively sloping 20 daily moving average just below that resistance zone at 230, and we came back down towards this support at 214 and the rising 200 daily moving average at 219. This is going to be a critical zone between 214 and 230, and if we break 230, we'll likely go fill the gap at 242, and if we break that support at 214, we'll likely go down and fill that gap at 206. Wait for a break of that range and then trade the breakout. On Apple stock, we were up 1.46% today, and Apple did get the first day closing above the downtrending resistance trendline, which did require that break and close above 177. So from here, we need to see more confirmation by more closes and more daily closes above 177. And if we can continue higher and start to climb, we do have that gap to fill just below 191, which would obviously be a very bullish push for the biggest stock in the market and the most heavily weighted in the indices. So pay attention to Apple and you can stay bullish above 177, but one day breakout isn't enough confirmation to tell us this downtrend is over, and we really need to break this previous high at 180.8. So jumping back over the S&P 500, without a doubt, we are in this danger zone of a lot of supply at critical resistance within a downtrend, so don't get overly bullish at resistance. If you want to get bullish, we really need to see the market structure putting in that higher low and higher high, and that will be the confirmation to get bullish. This is still a downtrend until it's not, so don't get overly bullish at resistance. There's absolutely no reason to take on that much risk. And if you want to short, these are your low risk entries of where you can start initiating short positions. Remember, low risk doesn't guarantee you're going to win the trade. It just guarantees that if you lose, you're not going to lose a lot. So continue to put yourself in the best risk-reward ratios with the best odds and stack those odds in your favor. And over time, you are going to be a very profitable trader. If you want to come crush this market, consider joining the Stocks Channel Trading Discord community or Bank Trade Alerts, and you can find out how to join either of those services in the description below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.